a deceleration in the pace of price increases as indicated by the newly released data from the National Bureau of Statistics, NBS, for October 2025 shows that Nigeria's headline inflation eased to 16.05% in October 2025, down from 18.02% in September. Analysts say the easing reflects the combined impact of targeted government policies, improved supply flows, and more stable market conditions. But we have CCO, Sustainable Stories Africa, in person of Wade Aime, joining us now to break this down. It's a pleasure to have you in.
Finally, I'm here.
Finally, on Business Edge.
And it's good to be here, Joanna.
Yes, and it's a good opening. 7 consecutive months of disinflation. I see the look on your face, and I hope we get that explanation. But yeah, 7 consecutive months of disinflation in Nigeria. We are supposedly seeing the prices of food inflation. I think we took the highlights with the data with the decline in food inflation. Is this something we should be celebrating, and who is celebrating, the statisticians or the Nigerians themselves?
I think it's the statisticians.
Interesting.
So food inflation will usually go down about this period. And why? Because the supply has increased. Harvest just came out. New Yam Festival, all those things happen. And if you understand the agriculture system in Nigeria, then you find out that there are 2 major harvest periods. So the planting has already started, so we'll start to see another major influx of food into the market again, February, March, and so on. So I think for me it's the statisticians, but the real truth is, yes, we're heading towards the 15% target for inflation by this administration by the end of this year. But my question continues to remain is, what is the basis? Because food prices haven't significantly come down, income levels haven't significantly gone up, and everybody says, oh, the market is booming. But my question always remains, how is the market booming? Is it based on increased turnover and less sales in terms of the goods that are being sold, because prices have tripled and so on? And is it that warehouses are still stocked with produced goods, or productions have even gone down? I was having a discussion, I think a few months ago at the end of September with another colleague who does analysis of the manufacturing and those sectors. And the question I asked was, what's the stock level being held? What's the stock level being sold? Has it increased significantly? No, it hasn't.
Volumes, yeah.
And that's the reality. If prices go up, then if I used to sell 1 before, if I used to sell 3 before and prices have gone up and I sell 2, of course I'll make more money. And that's, in my own opinion, that's what's happening. But when you now consider the fact that you look at how the rebasing has been done, I have no problem with rebasing the structure of your CPI. Why? Because, as time goes on, every 5 to 10 years, new things come in. It moved from about 760 items to 935.
Right.
Fantastic. But a major part for me is when you reduce within that basket where Nigerians spend the most, food, by almost 11 points. And then you go on and say that, just a second, I just want to confirm that restaurants and accommodation services have moved up by that 10. And my question is, where? In the rural areas?
So are these figures affecting the general populace?
Yes, it just, so food, for instance, if you move it from 51% to 40%, if it was 100 naira before, and it used to be 51 naira, now it's now 40 naira. So there's a significant drop in terms of what you say people are spending and the inflation rates that will come out of that. So where you cannot see absolute figures of past and present so that you can actually compare, then it beats me when every time you say, oh, I was listening to the Minister of Finance say, oh, Nigerians now spend less than 50% on food. Is it true?
And I think probing the data as well. So why are they spending less on food? Is it that energy costs or other things have gone up?
Well,
That's one perspective.
All those other things have gone up, and you've actually increased energy costs in terms of your rebasing percentages, which makes sense. Are you with me? Because all those costs have gone up. But my biggest worry has always been, what's it called? When you move restaurants and accommodation services from 1.2 on the basing sheet to 12.9, and that's the question I continue to ask. How many times do you eat out, Joanna? And in the rural areas, how many people eat in restaurants and go live in accommodations? That's a huge mark. And when you do that and you drop food significantly, in my own opinion, you will drop the inflation rate, because food covers a huge part of what Nigerians spend their money on. Transportation, yes, it's gone up. Electricity and power, it's gone up.
It sounds to me like you're taking this back to the rebasing and the computation methods now.
Oh, yes.
You're questioning the data itself.
I do have my reservations about that data. And if I can't see previous data, the absolute spending, because it's not about the percentage points. It's about the absolute spending when you compare. You don't compare percentages against percentages. So if Joanna spent 100 naira last month, are you with me?
Yes.
I must be able to compare it 100 naira last year, October. Then I must be able to compare it to how much she spent. Then I do know whether she spent more or she spent less. Absolute. But when you tell me, Joanna has spent 10% less, how? Is it because I have reduced the weight?
Right. So there needs the data
needs to be probed.
Yes.
We need to see previous data, absolute figures, to be able to say, okay, there is a basis of comparison. And in media, when you're speaking about increases or decreases, you don't just speak about them in percentages.
Right.
You talk about the absolute figure moving from 1.2 to another, and then saying that it's either decreased or increased. And I haven't seen that. I haven't been able to access previous year, the previous year's absolute data.
Yeah, there's a call being made there to probe the data further. Another thing that you highlighted is the fact that, we're celebrating recovery, especially in the corporate space, and some of the listed companies. You're going through their books, you're seeing, revenue has gone up, and you highlighted that it's mostly due to the prices going up than the volumes, right? In your opinion. And I'm beginning to hear calls that protectionism commissions should begin to probe the pricing behavior of corporates. You also align with that?
Yes, I do. But I probe it, yes. But can you stop that? I don't think you can. If the cost of raw materials have gone up 3 times, now everybody says, the dollar is stable. But let's remember that we're moving from an exchange rate regime of 360, 750 in 2023 to 1,500 in 2016. Yes, it's stabilized. At a point, it had almost gotten to 2,000 in 2023, 2024. Yes, it's stabilized. But of course, that's complete 100% devaluation that we see today. And of course, it's going to tell back to who? Come back to the consumer, because cost of input goods have increased. And what do you expect the manufacturers to do? If I bought this raw material at 10 naira yesterday and today is 30 naira, of course, who's going to bear the price? But the question for me remains, are you producing as much as you used to 2 years ago? That's one. And if you're producing as much as that, are you selling as much as you used to sell 2 years ago? Let's not just take the revenue figures for the value itself. Let's look at the volumes of transactions that have been done. And it's the same thing for me with the capital market. Yes, it's continually booming, but I like I said, I've continually had this discussion, and the question is, market values are increasing based on, as an accountant, we'll call it paper profit.
Right, paper profit. Okay.
Yeah. Has it translated into what's it called? M3, the velocity of money, increasing across Nigeria? I don't think it has, because we still have over 110 trillion in the economy. But Joanna, you and I know that the velocity of 110 trillion in Nigeria's economy is not being felt today.
So this recovery is not saying increased productivity. This recovery is not saying increased innovation. It's just increased prices.
Well, in my own opinion, because I think it was not too long ago, and I think it was the man president who was on your show, and he was talking about that you're not seeing a lot of all these reforms translating to the manufacturing sector.
Right. And
that's not me. That's someone who does it every day. And this is me as an analyst looking at numbers and looking at data. Data I must look at from different perspectives. So for the manufacturing, I must look at volumes, production, and sales. So if I produce 100 and I'm selling 50, and I'm still making the same kind of money I'm making 2 years ago, then there is a problem. If when I made 100 in 2023, I sold 80, and I made less money. So those are things that we need to look at. Yes, there's stability. Yes, there's a need for continued proper implementation of policies. But let's not just shout the eureka moment. That's my opinion.
So it's not time to celebrate just yet. And I think
I don't think it's time to celebrate.
Yeah, you've painted the bigger picture of the reality on ground.
Yeah.
Beyond just the numbers.
Beyond just the beyond just the percentages, because in the real sense of it, I haven't really seen the absolute numbers of October 2023 against the absolute numbers of October 2024. If I see that and there isn't much difference, or there's a huge difference in it, then it speaks to me. Now, the other thing about value is this. Like I said, if you're selling less, if you're selling less at a higher price, of course, value will increase, but those volumes will tell.
Right. I think that, that's the fuller picture. But believe it or not, this data, right, the 16.02% is going to inform decision making, especially next week at the MPC, and we're talking interest rates. You mentioned manufacturers. We know that they have been squeezed as a result of interest rates being elevated. We have begun an easing cycle. I assume you expect that to continue?
Yes, I do. I expect that to continue, but I don't know whether it's going to be very, very significant. When you feel the pulse of the CBN governor, yes, he can see that the data is showing a huge reduction in inflation. But it's not just about the data for him. It's also about the businesses. Are they still complaining? Because we're still complaining about power shortages.
Right.
We're still complaining about the ability to access foreign exchange regularly. Yes, it's available. When I say access, it's not about the availability. It's about the capacity to access it.
There was a data indices that said 50%, only 50% of manufacturers have access.
And that access is not that it's not available. Window. It's the capacity to access it. Because my 1,000 naira in 2023 has only become 300 naira in 2025. So do I have the capacity to access my 1,000 naira worth? It means I need 3,000 naira to actually access that. So it's not about the availability. Stability is fine, availability is there, but do we have that capacity? Because if we do have that capacity, then you will now start to see consumer spending increase. And this is a question I continue to ask a number of economists. I'm not an economist, but I continue to ask them, if consumer spending is not at the speed of 3, 4, 5 times, do you think we're actually recovering as an economy?
Yeah, and I think that takes it back to jobs, takes it back to manufacturing, and I think that
takes it back to spending power.
Yeah, that has been a huge part of the conversation. But let's stay with interest rates. For a moment, the big decision that will be made. We have triggered an easing cycle. We also know that the elevated interest rates served some parts of our economy, right? Pretty much the fixed income side of things, the inflow of hot money. Right now, we have started the easing process. How do you see that impacting those FDIs? FPIs, I beg your pardon, how do you see it affecting that and the ripple effect that could have? How do you, there's a balancing of dance to be done
like my friend and former partner will say, there are three things you can't do at the same time. Do you understand? You just can't ease interest rates and think that all those the other two indices, I can't remember the indices, but the other two indices are going, no, they always have a correlation. Why you have so much FPIs and less FDIs is because the money is hot. In 20 days or in 30 days, I'll do 22%. They're not getting it anywhere else in the world. So $1 million that I put into Nigeria will give me 22% in 30 days.
Right. What does this mean for FX? What the stability that we have somewhat achieved.
So that's why I think the CBN is going to be a bit cautious, because I don't think they want to drop that interest rate to a position whereby you see that hot money fly out, like it did. I think it was in 2021. Yeah, 2021, and immediately it flew out. What happened? The economy almost went into a recession. That's coming out of COVID and then seeing all that money go away. And then that money stayed away for so long. Why? Because the US markets were, why come to Nigeria for 25% when I can get 5% in the US? But now things are a bit easier, but I don't think they want to drop it drastically.
Right.
Otherwise, we just might now have an issue with FX, which I don't think Nigerians want.
Right.
And this is Christmas.
Yes, and speaking of Christmas, the festive season, prices typically go higher December period. And we know that there were fears of instability, especially within the fuel market, but they reversed the 15% tax.
Good judgment.
Right? Good judgment. Till when? I think is the next question on a lot of people's minds.
From what I hear, they said they will look at it in Q1 of 2026. It could be any time. It's not January. That one, I'm sure that they won't do that in January. Otherwise, you just want to finally, put the nail on the coffin, in my own opinion. So I guess they will continue to have a lot of stakeholder engagement, because we also need to be careful. There is a gap in that industry, and what helps to manage that gap is importation.
Okay.
And nobody should ever make that mistake.
That gap is what?
So
supply?
Yes, supply. It's a supply gap.
So you're saying the main players now locally are not able to meet demand locally? Is that what you're saying?
No. From the analysis, from the data I've seen and the analysis I have done, the main players contribute about 40-50% of production into local markets. So what happens to the other 50%? And let's also remember that sometimes when it comes to refining, it's not just the refinery making a decision about the products they are refining. And a good example, I'll use this analogy. When Nigeria's refineries weren't working, Nigeria took its crude elsewhere, refined it, and brought back products to Nigerians. And there are a number of countries that do that across the world. And so I don't think, in my own opinion, I might be wrong, but I don't think in my own opinion that the refined products that go through the main refinery today is strictly for Nigeria.
Interesting. All right, I'm sure that's a larger conversation to be had at the end of the day. But thank you so much for your thoughts and perspective on the show today.
And thank you for having me on the show.
A pleasure.